Hello and welcome to the business news here on RT. Well, in 4 days, the U.S. government will run out of money. The Democrats and Republicans are still arguing over how to cut the deficit and stalling on raising the debt ceiling. Well, the markets believe Washington will act in time to avert disaster, but there's always a risk. Well, joining me now to discuss just what might go wrong is Louise Cooper, markets analyst at BGC Partners. Good to have you with us on the program. Ms. Cooper, now let's say we come to work on Monday morning and the U.S. still has not raised the debt ceiling. What sort of mess would there be?
I find it quite interesting that there's been, in my opinion, quite a lot of complacency by everybody in financial markets. As I walk around the trading floor or speak to economists and analysts that I used to work with and colleagues and friends, they all say, do not worry, Louise, a deal will be done. Well, I think we're now getting to the stage where people are really starting to be concerned that a deal may not be done. So today we've seen in the front page of the Financial Times a lot of economists and strategists and analysts start to be quite vocal in their criticism of Washington, saying, come on, guys, it's time to sort it out. I think a lot of nervousness. We're all waiting for the last-minute deal. I think markets will give them probably until Monday or Tuesday, but I just think it could turn very quickly. I think you could get a run on confidence very quickly.
Yeah, speaking about the confidence of the markets, how heavily is sentiment being dominated by sovereign debt in Europe and the U.S.? I mean, is it overshadowing some good corporate earnings figures we've been seeing?
As far as investors are concerned, yes, we're interested in the earnings numbers. Yes, Vodafone today has returned, over $3 billion to its shareholders here in the UK. Yes, we've had better figures from B-Sky-B. And yes, we do talk about these things. But really, the big picture, it's all about the big picture. It's all about the macro situation. It's all about the Eurozone's highly indebted periphery countries. It's all about the crisis in the States. And that is truly where investors are focusing their thoughts. So it is dominated, really, at the moment by the macro situation.
You were expressing a lot of doubt earlier that you've been hearing, but let's be optimistic a little bit. Even if the U.S. does cobble together a deal, is it like a Band-Aid solution? Will the problem reemerge when it has to raise the debt ceiling yet again?
Well, we seem to be having the fun of kicking the can down the road here in Europe, and maybe the Americans are discovering the joy of that particular game as well, because obviously, unlike many countries, they have this mandated, this legal limit to the amount of debt that the American government can take on. Doesn't exist in many other places around the world. And so if it is just a short-term solution, then we will be coming back and we will be revisiting this. And I think what is concerning now a lot of players, even if we do get that short-term fix, is the damage it's going to do to the American economy, which isn't in great shape anyway. We're expecting second quarter GDP figures out, in the next 2 hours, actually, in 2 hours' time. And I think the concern is the damage that this huge uncertainty is doing both to consumer confidence in the States, but also to business confidence as well. And I think the markets will look very closely at today's economic GDP figures.
All right, so what should the pessimistic investor do that sees downgrades and defaults in the U.S. and Europe? Where do assets go at this point?
I don't know, maybe you should hide under your duvet. I'm not sure. It's a wild and crazy world out there. Obviously, you've seen gold very strong. You've seen the Swiss franc very strong. You've seen German bonds, German government debt. A lot of buyers of German government debt still. Or you could just put your money under your mattress. I mean, to be honest, where is safe nowadays? US Treasuries, US government debt was deemed safe. That was supposed to be the ultimate risk-free asset. Well, I think many people would say that American debt is no longer the safest place to put your money.
I do know some people who've actually done that. Okay, let's quick look at Russia now. Russia is an excellent budget position. Does that make it an attractive investment in the current climate?
I think there's still some big, serious questions about Russia, really, in terms of the rule of law, rule of business law, deep-seated corruption. I mean, to be fair, a lot of oligarchs take their billions out of the country. Yes, it benefits an awful lot from high oil prices, and we've had our high oil prices for many years, but I think there's deep structural reform needs to happen to the Russian economy before everyone starts piling their money into Russia rather than US T-bills.
Okay, thank you very much for your analysis there. Louise Cooper, markets analyst at BGC Partners. Thank you.